got no muscle, no hustle, no backbone. I stand alone, not tripping. Just saying, I'm different. Ain't hanging on to the coattails of the next.
Hi, this is Mr. Not Advice. Before we get started, it's legal disclaimer time. Mr. Not Advice is not an investment advisor, financial planner, or a registered representative. This podcast was made for entertainment purposes only and should not be construed as investment, tax, or any other advice. Nothing in this podcast is promotion or a sale or an inducement to purchase or invest your money. Never get financial advice from a complete stranger on the internet or via podcast. By listening to this podcast, you agree to hold harmless its author, its creator, and all of its guests. Always consult with your advisor before you do anything with your money. Now back to the show. Well, thanks for joining me today. I have a very special guest today. This is the boss, Mr. Not Advice. I have Mr. Greg Reyes, who, when I look at companies or I look at stocks to invest in, I always try to go to the purest source of data, the best information. And when I look at Enevox, at EOSE, the two companies we're going to talk today about, among other things, going to somebody who has taken a company from startup to a multi-billion-dollar company as a CEO. I don't think we can get anything better than that, especially with who I've got today. I've got Greg here today, Mr. Reyes.
I'm doing terrific. Thank you. How about yourself?
I'm doing great. I think we've got a couple timely topics today, especially with the price action in both EOS and Enevox today. I already saw some people on Twitter a little bit losing their mind over EOSE, which we probably want to talk about that today too. It'd be helpful for my listeners that don't know you, maybe give a little bit of background about yourself and what you bring to the table.
Sure. I'd be happy to. Let me start off by saying that I'm not a professional investor. I'm not a CFA. I simply manage my own home office. And the approach that I take in terms of, how I think about investing and how I think about investing capital, particularly in technology companies and emerging technology companies in particular, is very much based on my own personal experience. I was the CEO of a company called Brocade Communications, and the way that I got involved in Brocade is I'd just been the CEO of a two-way paging company that I sold. It was a startup, and I was feeling like I had a win, and I was looking for my next opportunity. And in 1997, I was sitting at the kitchen table on a Sunday morning drinking a cup of coffee, and the front page of the local business section said that there were 200 CEO jobs in Silicon Valley and no qualified CEOs. And I thought, well, I'm qualified, and I'm not ready to retire. And I just started to reflect and think about, what does it take to really be successful? And of course, you kind of think through your own personal lens and think about, well, I need to work hard, and I need to have the right background, and I need to have the right team. And, there are a lot of things that involve you personally that are important to success. But what I came to realize is I had a number of my contemporaries that had gone to Yahoo, that they had gone to Microsoft, they had gone to any number of tech companies, and they'd made a lot of money, a lot more money than I had. And I thought, well, you know what? There's nothing really special about any of them. I can outwork them. I think I'm better, particularly in the sales and marketing front. Like, why are they retiring and I'm still working? And I thought, you know what? Maybe it's not just them. Maybe it's the companies that they got involved with. So I developed what I call a success filter. And it basically is a set of attributes that I was looking for that would be hallmarks of a successful company, that could be a company that could withstand the test of time. The first is total available market. If you've got a huge market, you can build a huge company. If you've got a small market, like $1 billion market, and there are 3 entrenched dominant players, every deal's a knife fight, and you can only be, a subset of that. The other is, what is the customer pain? Companies that offer products that help customers make money or save money tend to do much better than products that are nice to have or products of convenience. The next is the underlying technology, right? It's kind of all about the technology and the uniqueness of the technology. And the term that I coined, and some people think it's a stupid term, it works for me, is does the company have physics changing technology? And what I mean by that is, and a great example that I think virtually everybody can relate to is, before we had the Apple smartphone, we had MP3 players and we had phones. And Steve Jobs was brilliant, and the technology had evolved to a point where it was now possible to combine those two things. And of course, the internet got layered in on top of that, and we saw this massive market emerge, right? Those were things that existed independently that, when they were creatively combined, created a whole new market and new market opportunity that could not be addressed by just selling an MP3 player or a cell phone. The next is obviously the team, right? You needed to have a great team and world-class players in all positions. Unit economics are key. Could you scale the business profitably and quickly? Did you have to build a huge, expensive end user sales force, or did you have an opportunity to leverage OEMs or distribution? Was the company well capitalized? Were there any customers on the board? I found that could often be the kiss of death because a customer can stifle a company if they're on the board and want to push the company in a direction that may be in their best interest, but not necessarily in the best interest of the shareholders. And then is there no dominant player that is entrenched? And entrenched is the key word. So that was my filter. That's what I used to identify Brocade as an opportunity. I must have looked at, I don't know, 30, 40 companies that I did due diligence on. And I found Brocade. I found the headhunter that was looking to fill that CEO spot. It took me 27 interviews to get the job. And within 4 years, it was a company with a $24 billion market cap. I'd become, wealthy beyond my wildest dreams. And Brocade became a gorilla in the industry with 90% market share. So I use this filter today when thinking about any technology company. So that's kind of who I am and how I got to where I am today.
Thanks for sharing that. And I want to dive right into the list that you had given. Let's just focus on Enevox right now. I was writing down your list of items that you go through, what you went through to screen for a professional opportunity, and then also you using this as a matrix and model for investment opportunities. I guess, when I look at Enevox, everything you listed sounds great, right? You and I have had time to talk privately, and I think you and I are very similar. We're not full-fledged bears or full-fledged bulls at any time on any of our investments. Would you agree to that?
Oh, 100%.
Looking at what you offered here, let's look at the number 3 category you listed, the quality, which is technology. And as I look at Enevox, the best you can do often, if you don't have a third-party lab, right, to test the technology, is you have to believe the principles, okay? And have you arrived at a comfort level with the principles, not in terms of integrity, okay? I'm talking about, do they know, are they technologically, do they have the bones for it? I know Raj came from a technology company, but my view of that, Greg, is he was not the decision maker. While he had some P&L responsibility, at the end of the day, he knew he worked for a huge company that had deep, deep pockets. And if his division failed, the company didn't fail. He would be out of a job, right? And so it's a little bit different. And I think we're seeing his development as a CEO. But speaking specifically to the technology, what has given you the comfort level when you look at Enevox and you're looking at just the physical part of the design?
Yeah, I'd be happy to wade into that. So if I think about the lithium ion battery market, it's been dominated by a handful of Asian companies that have for decades been using the same architecture. And the description of that architecture is called a jelly roll. And if you were to, take a Duracell battery and you were to take the casing off and you were to start peeling it apart, it would look like a jelly roll that you're basically, unrolling. And there are layers of graphite, lithium, separator, cathode, electrolyte material, and that technology for the last 20 years has only been able to gain between 2 to 4% in increased energy density year over year. So Enevox shows up with a new architecture that allows them to use a 100% silicon anode, which has the ability, theoretically, to store up to 100% more energy in the same physical form factor. The only problem was that it would expand, and it would expand geometrically in relationship to its physical size when charged. So the brilliance of what Enevox has done is they've developed what they refer to as a 3D architecture. And that 3D architecture, basically, instead of rolling it like a jelly roll, they layer a silicon anode. And now think of like pieces of tape and about that thick.
Right.
A silicon
Okay.
anode, a separator, cathode, electrolyte material, and they stack them on each other. And then they constrain them with a physical constraint in their packaging. And this allows them to effectively solve the 100% expansion problem with the traditional jelly roll architecture. So much of the Enevox investment thesis, in my opinion, really pivots on, do they have the penultimate architecture for the use of a 100% silicon anode material? Now, keep in mind that the company was introduced as a public company back in one. And at the end of the day, uh, we haven't seen any other competitive technology emerge. We've learned of new materials companies like Group 14 or Silicon Nano that can provide a powder or a material that can be used in the construction of batteries. But we haven't seen anybody else come out and say we've got a 100% silicon anode battery that can offer the kind of density that Enevox can. And then if you look at the material agnosticism that Enevox has, their architecture allows them to pick best-in-class anode material, best-in-class cathode material, best-in-class electrolytes as they become available, using them in the same packaging format. And this gives them flexibility and agility and the ability to move. So if you take what the company has said publicly, which is we're going to introduce a battery called the EX2M for sampling in Q4 of 2024, and it's going to have 30% more energy density than today's best-in-class smartphone lithium-ion battery, that 30% increase implies that they've got a 5 to 10-year lead over the competition. On top of that, the company's talked about the fact that their architecture may, in fact, be very, very important in the EV space, because the issues with EV batteries are that they tend to get very hot, and that the issue so much isn't being able to go 600 or 700 miles on a single charge. It's being able to basically charge your battery in the same time frame that it would take to fill up your car, which is around 5 minutes. And Enevox believes that they can come to market with an EV prototype that will allow them to get to 90% plus charge in 5 minutes. And their layered architecture actually acts as a natural heat sink, so that it should, in effect, be able to reduce the cooling required with today's lithium-ion batteries in EVs, which take have additional weight and additional cost. And they've announced that they've entered into a MOU agreement with one of the largest North American EV OEMs to develop a prototype. And, we've heard rumors that they've been approached by other auto companies. So,
Let me interject something here. I want to
sure.
ask you a question about that. So one of the issues I've had with Enevox has been, okay, you all keep changing your focus. Is it wearables? Is it cell phone batteries? Is it automotive batteries? Because when I hear, hey, we got an MOU with a leading automotive battery manufacturer to do a prototype, what I hear from that is more time. It's going to take more time, right? The risk in order to hold on to this on a longer term basis. And we're going to assume that the majority of our listeners aren't people that fall in love, marry a stock, dollar cost average down from 100 to 3 cents. Okay. We're going to make the assumption that it's a measured part of your portfolio and all that. What would you, let me get back to you, Greg. What would you say about that? That, when I look at it, it just seems like their focus keeps switching.
Yeah, so that's a fair point. And this is the way that I think about it. And it's just the way I think about it. And I could be wrong. And there may be other ways to think about it that, in fact, are, more apropos. But the way that I think about it is that for their Fab 1, they were making what they called the EX1 battery. And they were very clear about the fact that they installed the equipment during the COVID lockdown. They didn't have access to engineering resources from the equipment manufacturers, and they basically had to cobble it together on their own, and that they didn't have the ability to, in effect, produce at volume the EX1 out of Fab 1 and do it cost effectively with the unit economics that they were striving for. So they pivoted in October of last year to focus exclusively on smartphones out of Fab 2. And they introduced a technology or a product that they call the EX1M, which is designed specifically for the smartphone market. So that's what they said they were doing in the fall of last year. And that's the course that they've been on. They've repurposed their Fremont facility to just R&D, and they've been working diligently to stand up what they call Fab 2 in Malaysia, which has a high-speed line to basically produce batteries, initially at 1,300 units per hour, and then in subsequent additional lines at 1,650 units per hour. And I'm anticipating that we're going to hear in their upcoming call that they are shipping thousands of units to smartphone customers for evaluation. That qual cycle is approximately a 9 to 12 month qual cycle. So that aligns with what the CEO has said in terms of the customers starting to begin ramping in the second half of next year. What's happened in the interim is that they've been approached by an auto OEM to do a prototype. That really isn't distracting, I don't think, from their core focus of the smartphone market. That prototype, they've said, is going to be shipping sometime before the end of the year, and it'll probably be evaluated for another year or two. So I view that as just an upside opportunity that could be massive.
Okay.
And I also anticipate if they do pursue the EV opportunity, that it will be through technology licensing or some kind of a joint venture. But if I had to guess, I would say that it would be more like a Rambus licensing opportunity that would generate, just raw margin dollars. So that's on the periphery. They also recently announced that a virtual reality OEM has approached them to do a battery for their AR/VR headset. And as part of that announcement, they announced that they're going to basically have the customer pay for all of the non-reoccurring engineering and tooling up front. And being an ex-CEO, reading the tea leaves, what it says to me is that that particular OEM came to them and said, what's it going to take for us to be a customer? Because we need the battery. So if you think about shipping samples now for smartphone customers, the 9 to 12 month qual with the ramp beginning in the second half of next year, it kind of makes sense to be able to do different form factors of this EX1M, provide them to IoT customers and wearable customers, because they don't have the same qual cycle. It doesn't take 9 to 12 months, and they can get to market faster. So from a nuance standpoint, you could say that this is actually kind of brilliant, because the real ramp doesn't begin until the second half of next year. And in the interim, I can start shipping parts and show up in, whether it's Meta's or possibly Apple's AR VR headset. If I had to guess, it's Meta, and starting to show up in other devices, all off of the same line. Like the exciting thing to me about the Enevox Gen Fab 2 first line is I believe that they can produce up to 50 different battery form factors. Now, would it be ideal to have a dedicated line doing $100 million or $150 million for one or two large smartphone programs? Well, of course, but that's probably not going to happen until we get into 2026. But in the interim, I think they can start generating revenue, future-proofing the technology, getting customers on board, getting them through the qual cycle, and it all fits perfectly into their product roadmap and their existing production strategy.
So let me ask you this question, but have you seen it work?
No, I have not. As a matter of fact, nobody has. But on August 8th, they're going to do the grand opening of Fab 2 in Malaysia. They're going to be showcasing the line. Rumor has it that the Prime Minister of Malaysia is going to be in attendance, as well as customers and vendors. And again, just thinking about this through the optics of a CEO, public company CEO, you're not going to do that event and not have the goods.
No.
But again, we'll find out pretty quickly here.
Well, for those listening to us today, get your photo recognition software out too, because whoever the guests that are there will need to be run through to see which companies that they work for. So what I hear you saying is this, because my thinking was, or my perception from the outside was, they keep changing where their focus is because they're having issues. They're not seeing the immediate market demand, or whatever it is. Okay. So that's why they're doing it. Whereas what you're telling me is, no, it's because of the opportunities, and the way they communicated it, from my perspective, is poor, because it would have changed in my mind. It just, from my perspective, came across, Greg, that, and this is a consistent, I think, with the company, in my opinion, is it wasn't communicated well. And I gotta, as an aside, I've got to say, one of the things, I'm new to the whole Twitter thing and everything, but one of the things, when I looked at ENVX last January, before I had a community and everything, was, if I start commenting on this, are these investors going to be like Wall Street Bets people? Are they going to be GME and AMC? And other than a couple knuckleheads, no, they're very intelligent people. Goes for the EOSE crowd too. From a communication standpoint with investors, and if you're comfortable, how would you score them on like a 1 to 5? Because I give them a 1. And this is directly related to what you were just talking about, right?
Well,
I give them a 1. I don't think they've communicated well. I don't think they understand the whole, building momentum into a stock, and I understand they need to be careful, and don't think they've done a very good job communicating with the investment community. For example, the Routejade purchase, or the announcement of the military deal. I mean, it wasn't even their contract. So medical device, we never got size, unit count, things that normally you would get with those types of orders. I would rather them have said, a year ago, hey, look, we're a development stage technology company. Okay, and set the stage and set the expectation for that, to that man. I guess, if I'm making sense. Does that make sense to you?
No, it makes total sense. And in fact, I think some of the confusion around messaging and some of the errors around messaging, and maybe a lack of understanding that, you can't tell an investor, go back and listen to the prior three calls in detail, and what we did will just make sense to you. And I was pretty vocal about it on Twitter, and I somebody asked me, why is the stock getting pounded? And I shared my view, pissed a lot of people off. Some people have accused me of, oh, he was pumping and dumping, and it's all a bunch of bullshit. But I reached out to the company, and I provided to them feedback in writing about, what the narrative was, how the narrative got mangled, and what needed to happen to reclaim the narrative. So I communicated with the company, and I shared my views in writing, laying out my assessment of what the narrative was, how the narrative got mangled, for lack of a better word, and what they needed to do to reclaim the narrative. And, if I was to go back to the Q4 call that happened in the first part of this year, I would give it very low marks. But if I was to take the last call,
I'd
I would
agree.
give it much higher marks. I think that
I
they did
agree.
a much, much, much better job of
Yep.
explaining things, providing context, talking about the implications of, what they're doing and why they're doing it. And to a certain extent, Raj, like you said, he was, one of the high-ranking guys at Qualcomm, but he wasn't the guy communicating with Wall Street on a regular basis.
Right.
And a lot of this isn't necessarily intuitive. And I think that they have done a really outstanding job in this last conference call. And hopefully there's some retained learnings there, and we get another outstanding call, and we get to see the fab in full Technicolor and hear that they're shipping samples and get more color on customer engagement. But I want to address the MOU point in more detail. Right? If you think about it, the MOU is basically a document that outlines the company's two intentions, their memorandum of understanding. That's what it stands for. Really, until Enevox is able to deliver product, the customer is able to test product, they know exactly what platform it's going to reside in. You're not going to get to a formal supply OEM agreement. But I believe that those are being discussed and underway. For
Okay,
those who really follow, go ahead.
let me ask. But I understand that, and if it's standard operating procedure, that you don't list any detail from the MOU, but from a money manager standpoint, I'm looking at here going, my gosh, guys, all you have to do is, I don't know, release a detail. If you can't, maybe the company that we're partnering with is in Asia, it's in Europe, whatever, to build some of that excitement, because and that's one of the things that drives me nuts.
Well, they did say that they've got test plans from the top, I believe it's 6 out of the 8 largest smartphone customers. They have talked about
True.
Lenovo and Xiaomi, and they did say that the AR VR company was Silicon Valley based. They did say that the EV company was US based.
Okay.
But let me just finish the thought, because it's really an important
Sure.
one. So imagine, and this is a hypothetical, imagine pretend you're Meta as an example, and it gets out that sometime in the first half of next year, you're going to be able to buy a version of that headset with a battery that has twice the battery life. It could kill sales for existing products. So it's very customary, particularly in the consumer electronics business and the wearable space, to not provide those details until the product is shipping and available for purchase by end users, to avoid killing sales for existing customers. So I think that they've done as much as they can do at this moment, and I think we'll hear more.
How would you score their communication to the investment community?
Well, I I would agree with you that in the fall, it was sorely lacking, and I think that was reflected in the share price. And I think it's improved dramatically in the last call, and hopefully they'll keep it going. The stock's re-rated pretty significantly from its $6 low. In order to stay where it's at and go higher, companies got to continue to show proof in achieving the waypoints that will give investors confidence that they're tracking. And tracking means that they've
Yes.
got a path to achieve their unit economics.
But let me ask you this question here. And what we'll do is, because I'm not going to paint you into a corner, I'll just give you my score. I give them a 1 on communication. And yes, you're absolutely right. The last call that they did, I actually listened to that and walked away from it and said, wow, that was different. It was better, right? So I'm glad to see the trend. In fact, I'll revise it to a 2. That's not fair. I do want to ask you, imagine this. One of your divisions of Brocade says, to you, and this is not a perfect analogy. You ask them, how's the division doing? And they say, well, it's going really good. We've got new contracts, and oh, great. How big are the contracts? And you don't get an answer to that. So I'm talking about medical device, I'm talking about the U.S. military contract. If you were the CEO of a company and a division was reporting that, or in your capacity as you evaluate companies professionally and now, running a family office, would that sit well with you as an investor though?
Well, I mean, it kind of goes back to the names of the companies that they've discussed that they're working with, the Xiaomi, the Vivo, Lenovo, Oppo. Any one of those customers could take hundreds of millions of units. And I think the reality is, and Raj has talked about this publicly, we're providing samples, they're doing testing, and once they decide what the initial platform is, that the initial battery is going to go to market in, then I think he'll be in a position to, talk specifically about, numbers of units. He has said that, the initial programs that he anticipates entering the market with will be in a phone platform that'll do, I think he said 3.5 million, but assume it's 3 to 4 million a year. So I think it's coming. I think we're going to get it. I think we're going to hear about unit shipping. I think we're going to hear about, progress and success as it relates to qualification. And then we're going to hear about them signing a, definitive agreement, a supply agreement. And then we're going to hear about the product, coming to market. I can tell you this much. He's not making this stuff up, but
No, I didn't think that. No.
Yeah, but it's a continuum, and he's talking about and tracking to the continuum. And this is a guy that's done it before at multiple companies. He's got the customer relationships, and really, to a certain extent, much of the Enevox bet, I shouldn't use the term bet, investment thesis is predicated upon, do you believe that Enevox's silicon anode architecture will be the winning architecture? And do you believe that this company can achieve its unit economics of 150 million per line with 50% gross margins? And if you do, this is a company that could be, a massively valuable company. But they've got to check off some waypoints. The first is standing up the factory and shipping product and getting feedback that the qual cycle is going well. Then hearing about, definitive agreement. So I'm not saying at all that this is an investment without risk, and I'm not saying at all that it's guaranteed to be north of $100. But what I am saying is, if the company continues to track and the thesis remains intact and they hit their waypoints, which they have been doing, this is a pretty exciting opportunity.
I think,
As
yeah.
a matter of fact, I would go as far as to say it's as exciting an opportunity as I've seen, since I left Brocade, in the 2025 timeframe. It checks all the boxes.
It's interesting because I don't disagree with anything you said. What I guess from my perspective, I all my investment decisions, whether it's a straight, probability analysis or it's that gut calculation probability analysis. But I look at everything as what's the chance of them to accomplish X, Y, and Z. And you talked about it and put it in the context of waypoints, right? And there were things that they had to do. I look at those waypoints as just being massive. Obviously, they are in, my perspective, in a much better position, but time has a way of doing that because some of the things that, obviously, as you're talking about, samples and the multiple different types of customers, takes time, right? I don't disagree with the upside potential. In fact, last year at this time, I had put out that said, hey, my price target was $100 in a year, right? And then that obviously changed and I ended up shorting it. And then I've been long here and there 4 or 5 times. So, I mean, it's something that I've stayed very much interested in. But aren't you assigning right now at this stage a higher level of probability that is going to be achieved given where they are on their waypoint journey? Because this is, as you had said, since Brocade, this is the best you've seen, the best opportunity.
Well, what I would say to that is that
You're out of your mind. No.
no, I don't think so at all. I don't think so at all because look, at the end of the day, the promised land is they're hitting their unit economics, that their
Mhm.
initial customer entrants are successful in taking share from companies that don't have the benefit of the Enevox energy density, that it's going to put them in a position where they can negotiate more favorable terms. And then customers, may come to them and say, hey, we'd like to basically have 10 dedicated lines. I mean, those are all things that need to happen. But when I
Mhm.
say the company's never been in a better position, if you go back to where the company was when Raj started, they didn't even have the spec finished for Fab 2. And now here we are, and they're going to have a grand opening. They didn't even have an EX1 that they could ship samples in the thousands or tens of thousands of units. Well, that's happening. They didn't even have a smartphone customer that was interested. And now they've signed one MOU, and I think they alluded to in the last call that they're in discussions with somebody else. So everything is continuing to move in the right progression.
Mhm.
But yeah, you're right. I mean, if the qual doesn't go well, there could be if there's a problem, with some competitive offering, there obviously is something more serious than a delay going on. But it's the same kind of risk that you have with virtually any pre-revenue company. The problem is, when you can answer all of those questions in a fulsome way, stock probably will be $50, $100,
Oh yeah.
maybe
Yep.
even higher. So
Yep.
part of the trick, and I hate to use that term trick because it implies some kind of magic. It's really being able to, in my opinion, you've got your narrative, you've got your assumptions, you've got your waypoints, and you've got the ability to squelch out the noise, if you will, whether it's volatility or it's a misstatement that's made by the competition, or it's somebody spewing some theory that they fabricated out of whole cloth. I mean, that's kind of the risk reward, isn't it? I mean, the way I look at this situation is company's been super volatile. When it was $39, was it probably too expensive? I think everybody could argue, yeah. And then it traded back down, and then went up to 29, and traded back down, and went up to 24, and traded back down, and here we are, in the 18 range. Now, for it to go from 18 to 50, a number of things need to happen. If they get delayed, is it going to go down? Yeah, of course it is. The problem with me personally is I round trip this thing every time, and I've left tens of millions on the table, and I'm just not good at it. I'm playing for the long ball. By the way, I if I had the skill set to basically swing trade and pivot on technicals, I wish I could do that, but it really hasn't been my area of focus. And by the way, I don't begrudge anybody that was able to round trip this thing 4 times. They probably made 10 times the money that I've made. And that's a great skill set. And there's nothing wrong, in my opinion, if the facts change and the thesis is no longer valid, to go short. On the same token, if you position yourself because you believe that, they're going to do another great earnings call and we're going to learn more about customers and they're going to be shipping units and they're tracking, can 18 be a base, on its way to 30? Yeah, I think it can if the market remains strong. But these things aren't without risk. I mean, shit, I wish I had a time machine and I could, go out to 2026 and see, 7 or 8 lines up and running and read all the press releases. But by then, the stock's going to be well north of $100. Sizing's important. Risk management's important. I had a lot of sleepless nights as the stock was imploding and I'm getting margin calls and trying to figure out, holy shit, what am I missing here? And I
Hmm.
concluded that it was a communications issue and it's been rectified. But are they going to continue to keep checking off the boxes? I hope so. If they don't, then I'll reinform my opinion. At one end of the continuum, and I'm not saying that you believe this, but you could say, oh, MOUs are just a bunch of bullshit. There's no contractual obligation. And then at the other end of the agreement, or the other end of the spectrum, you've got an agreement with a dollar amount, take or
Hmm.
pay, and it's in a platform that has a known number of units, and you can very easily calculate what the revenue implications are of that. And they've got to continue to do that. And I think that they will as they progress and they're able to.
I
But
would agree
I
with you. I've seen that change. I would agree with that. And I think that obviously you were instrumental in helping that. I hope that continues too, because being a former CEO of a huge company, setting that tone and setting the narrative, right? And being able to do that is just as important for a public company, I think, as what they
well,
do.
I think it's the key. Isn't it kind of the key? And then isn't really the gold standard the CEO that quarter in, quarter out is banging off the waypoints in the narrative that he
Yes.
committed to and
Yeah.
is achieving or exceeding his objectives. And
Yeah.
that's what I aspired to when I was a public company CEO. And sometimes you can't be as fulsome as you'd like because you just don't know. And look, let me say this about Raj and Farhan and Ajay at Enevox. These guys are the real deal. These guys are card carrying pros. They didn't go there to clip RSUs and make a few $1,000,000. I think they went there to make life changing money. They obviously had deep connections with the customer base. They did extensive due diligence, and they're playing to win. Like these are like real guys. These are guys that uh, they've got decade long careers, and every interaction that I've had, and I've had numerous interactions with management, that very thoughtful, very open to feedback, very open to criticism or coaching points, and it's impressive when you can have that kind of interaction and dialogue, and you don't get blowback or you're canceled or an ad hominem attack, but like,
Hmm.
wow, we didn't think about it that way. And by the way, I think that a CEO really is focused on a whole lot of things, hundreds of decisions that need to be made on a daily basis. And it's very hard sometimes to just stop and say, based on the last time that I communicated with our investor base, what were the expectations that I left them with, and how do I bridge them effectively to where we are today? Instead of just assuming that they'll figure it out or assuming if they listen to the last 3 calls. And I think Enevox gets huge positive marks for that evolution and that progression. And again, we'll see what happens with excuse me, their Q2 earnings release and what comes out of the event. But I don't think that we're dealing with guys that aren't serious. These are very serious guys, and they're pros and they care.
Let me, and I would agree with you. I think that I've seen their development since even last November. I've seen their development since last June, and it's good to see. I want to switch gears, and I want you to pretend you're back at Brocade as a CEO, and you had the great misfortune to inherit me as your CFO. And I come into your office and I say to you this: hey, look, I think there's a real possibility that we're going to get another spike in inflation. Capital markets are going to get even tighter. I think the overall stock market could go down anywhere between 20 and 30%. I think it's going to be largely driven by massive asset write-downs across primarily real estate, which is going to trigger consumer debt explosion, unless there's, they release the mother of all liquidity stimulus programs. What are we going to do as we're going to pretend you're the CEO of Enevox? What are we going to do to get through that time period? If spending is going to go down from tech companies, do we have sufficient capital? And I see they have sufficient capital, but what are we going to do, Mr. CEO, if that situation, that scenario unfolds where you've got either deflation or recession, rising interest rates, rising inflation, okay, and even tighter credit markets? What would you say?
So what I would say to that is to do exactly what Enevox has said that they're doing, that they're engaged with discussions with sovereigns as well as banks, as well as their customer base about providing low interest financing for additional lines in the most non-dilutive way possible. And with the unit economics giving them the ability to basically pay for a line in the first year, debt financing should be available from a friendly party at a very, very favorable rate.
Okay.
That's what I would do in that situation, because it is a capital intensive business, but it's not like you need to have $1 billion or $2 billion to build a fab. It's, 60 million a line. And if they've got, the customer on board and the backlog, if the customer's funding that, or the Malaysian government or Indian government or Korean government, it should give them an opportunity to manage through that. Because here's the really important point that I don't think a lot of people factor into the scenario that you just shared, which is, even in a crappy economy, Apple and Samsung and Vivo and Lenovo and Oppo, they're going to still be selling product, and they're going to be even more hungry for competitive advantage to take share. And they're going to be even more hungry to have a battery with Enevox-like characteristics to be able to run generative AI applications and AI on the client, whether it's, Chat GPT or fully taking advantage of, 5G networks. And, I think it's well known that you buy a 5G phone, but it's not running at 5G, because if it did, your battery life would be cut by 2/3. So I think they've got a product that is important in the competitive consumer electronics arms race. And if the product is that compelling, it should be easy to be able, I shouldn't say easy, it's never easy. It should be possible to raise a significant amount of capital with very favorable terms. And they've indicated that they're planning to do that, and they're in those discussions. So again, we'll have to see if they bear fruit or not, but it's encouraging.
So having a major global slowdown, I do see the flip side of it is, in terms of adding more value, delivering more value as an OEM manufacturer. And if you can do that through the battery, oh my gosh, right? And so, but some of these I think are not, I think, these have been some of my questions I've had about NVX, but I also know that, there are bears in this company. And I think a lot of that, the bear positions that I see, they don't make logical sense to me. And I think you'd have to go down the path of, well, I'm not going to believe anything they're saying, because that's the only way you can arrive at a bear conclusion having a high probability of being correct. These guys would have to be just liars, effectively. And that's not something I've at all. These guys, I think, I would say they're hungry, right? They're hungry and love the fact that after heeding your communication, I do see as I said, the change in how they communicate. It's great to see. So let me ask you this as we wrap this up. Price targets. Assuming let's just go 12 months out. Assuming all the things we've talked about, that there might be a delay, or the market might be down, but assuming all things being equal, a year from now, based on what your assumption is for progress, if you're comfortable doing this, where do you see the stock?
Well, like I want to qualify by saying I do not have a crystal ball, and this is just spitballing. But you go out a year from now, they should be at a point where they've got commercial agreements in place, that the OEM ramp schedules and the platforms that they're in are known, and they should be guiding to how many lines they plan to have stood up in 2026. And if at the end of the day they could have 3 lines stood up, that's $450 million approximately in revenue, 50% gross margins. The company should be cash flow positive, and then you start to, and we had this happen at Brocade, and that's why the market cap went from 2 billion to 24 billion. People just start doing math. It's like, oh shit, what one line, $150 million, 50% gross margins, and we know they're being qualified at this program at Vivo, this program at Lenovo. Oh shit, they got a Samsung deal. I'm making that up, by the way. Samsung deal that could be $1 billion in revenue. Who the hell knows where the stock could go? But where do I think it could be? This time next year, with people looking out into
How about a range?
20,
a range.
50 to $100.
I got 35 to 60.
So
but I'm more negative than you are, because that's my nature. Is I'm a show me guy. So as you know, I try very hard not to invest because of a story, right? And that's just the methodology that works for me. But I think conservatively, even if they only do half of what you just listed, this stock, what they're going to be able to show is progress. And
yeah,
that's the big one to me.
We're kind of in the zone, and this is the Brocade effect. And I'm not going to say that this is going to happen to Enevox, but it could happen to Enevox. But when I was at Brocade, we went from 5 million to 75 million to 365 million, and we were projected to continue to double in infinitum. Now, there were some things happening at that time that were events concluded that had dramatically affected Brocade's revenue positively. We had Y2K, we had Euro conversion, we had telco deregulation, we had massive investment in internet infrastructure. Many of those companies ultimately went out of business. So Brocade went from 2 billion to 24 billion, with people assuming that it would go on forever. It did not. But in the case of Enevox, this could be a decade-long runway.
Yes.
This could be a company that, if their architecture is the penultimate architecture for 100% use of silicon anode, and they're able to prove their unit economics and continue to refine them, that this could be a huge company. It could be a household name. Is it going to be? I don't know. I hope so, but time will tell. But it has all those attributes, and if we're $50, split the difference between 35 and 60 or $65, and in the out years they're guiding to 10 lines, and people realize that the only thing standing between them and growing revenue is just standing up more lines. They'll get more proficient at that as time progresses. But I mean, shit, we're talking a big market here. We're talking about a $42 billion smartphone market in 2023 for batteries. We're talking about a global lithium market that's projected to grow to 470 billion by 2023. We're looking at trends like this AI on the edge phenomenon, which could dramatically drive the battery TAM, because you're going to have bigger batteries, and you're going to need bigger batteries, and it's going to create new applications, and it's going to create upgrade cycles and accelerate upgrade cycles. As long as they're tracking that this has multi-year runway, and it could be, big stock. I mean, I thought Google was expensive at $80, three
Mhm.
splits ago.
Yeah, I agree. I mean, when you look at the multiples and I think of worst case scenario for the economy and all of that, there are still those companies that even during those periods, the stock continues to go up. And Enevox actually, through no doing of its own, may have positioned himself perfectly to be that type of stock where people are hungry because all they see are their other stocks going down every week, every day. And so there are those companies, and they're in the right space for sure. And I think actually, God willing, if Trump's number stays up, he gets elected. I think the round of tariffs that's about to come rushing from the White House and where it's going to be focused on is only good news for Enevox. Being in
I
Malaysia,
agree.
Malaysia is sort of like a sweet spot. The only better place I think, but it'd be much more expensive, would be South Korea or Japan. But with Malaysia, it's fantastic, right? They're not going to get the blowback because we know where those tariffs are all headed to China, right? And so they're not going to get any of that blowback. I mean, literally, it's like the stars are starting to line up. I've seen this happen with companies before. Sounds like what happened with Brocade, right? Where it just lines up. And that's one of the things I'm seeing within why I did open the leaps, because I'm like, this is a different, for lack of a better term, feel than it was 4 months ago, 5 months ago. And then looking at the stock performance and the strength in the stock, right? And if they have the moat from a technology basis, right? If it truly is the penultimate, then, oh my gosh, I've said it before, then for shareholders, the greatest risk to them becomes being bought out at too cheap of a price. I don't see these guys, nor do I see TJ doing that. So
I think you're absolutely right. And to just add some color to your comment about President Trump getting reelected. If President Trump gets reelected and he continues down the path of tariffs against China. At the end of the day, Enevox and EOSE are the only US-based battery companies in existence that have the ability to scale and deliver product with state-of-the-art technology. So it could really be an incremental tailwind if that ends up playing itself out in the marketplace. I mean, obviously, we've got a long time to go between now and the election, and
yeah,
God willing,
he's got to
President
stay
Trump,
alive first of all.
he's got to stay alive. Yeah.
Yeah, he's got to stay alive first of all. I just saw come across the screen before we got on that they had arrested somebody outside of Milwaukee walking around with a gun. I mean, he just has to stay alive. But I 100% agree. And I think actually the halo effect could affect EOS even more, just because of connections to Cerebras and Trump's White House the last time around too. And so,
Yeah.
But again, it's that things are just sort of lining up. It's not, some of the things you can plan for, right? As a CEO or as an investor, that's how I make my money, is what's the probability. And then there are things that are outlier events that you had no idea. Then they happen and you still don't have any idea to what net effect it is. But I'll tell you what, I'd rather be invested in a company today, okay, that isn't located in China, has no connections to the incoming White House and that whole VC group. So, things are absolutely, I think, moving in the right direction. And oddly, for as critical as in my criticism on Enevox and EOS has largely been because I thought the risks were outsized relative to the expectation of what people thought the current stock price should be at. I think that right now, I think EOS is too low. I think Enevox, we're probably right where we need to be, somewhere in that 15 to 20 range. So
Don't disagree. Don't disagree.
Well, I think this is a great time to pivot to EOS. And my position on EOS is they are no longer a going concern, period. They're no longer looking at being delisted. That's a huge deal. They have very deep pockets, but more importantly, they have access to deep connections now. Okay. through Cerebras. And really, Cerebras coming in changed the story for me because, I learned, if you want to be successful, do what successful people do, right? Well, Cerebras is very successful and they're very connected. And that's how business gets done. And so I'm very excited for EOS. And I actually, I know that the stock was weak today because of, that JD Vance had released a policy position early on about the IRA, right, the tax credit. And again, I look at EOS and I'm looking at saying, okay, I don't know how significant that's going to affect them, but they have Cerebras. And I'm not saying Cerebras is going to wave a wand and fix everything, but they're in a much better position. Obviously, Cerebras did its due diligence and they knew that there was the possibility, since one of the co-founders, was on Trump's Intel team, okay? They knew the possibility that the IRA credit could go away. So that's why I'm not entirely concerned about it. And it's quite frankly why I'm bullish on it.
Well, let me get you a little more bulled up if you weren't already bulled up enough. So if I use that same investment lexicon with EOS that I did with Enevox, let me just walk you through the headline. So the TAM is projected to be a $48 billion TAM by 2023. And that TAM does not include the potential for selling long duration storage batteries to data centers that are dealing with power consumption growth of as much as 9x just based on running generative AI applications in the cloud. From a technology standpoint, not a lot of people spend a lot of time on technology with EOS because up until a couple of weeks ago, the whole discussion was, is this company going to be able to remain solvent? And if they can, how much dilution is it going to take to get to the DOE loan funding, which in theory should give them a credit of $80 million, but they'd still need more money. All that stuff's gone. But if you focus on the technology, zinc versus lithium is the winner, in my opinion, for long duration storage applications. It's water-based. You don't have the risk of a lithium ion battery fire. Now, I don't know if you saw this. I had a barn burn because of a $50 DeWalt battery that spontaneously combusted at 9 o'clock at night, and it's been nothing short of a nightmare. Now, imagine a long duration storage battery farm of 20 acres with lithium ion batteries. I mean, you could burn a hole in the earth, but you don't have that issue with the EOS battery. It's environmentally friendly. All the materials are recyclable. They've got battery life up to 20 years in theory, as opposed to 10 years for a lithium battery. They've got slower degradation. They've got a broader temperature range. We've all seen lithium ion batteries. I mean, this may not be a great example. If you're a skier or you're a hunter like me and you're sitting out in a stand and it's freezing, I'll go out there with a fully charged phone. An hour later, I've got 20% battery life. Well, you don't have that issue in terms of battery storage degradation based on temperature. So they're checking the boxes for me from a technology standpoint. And from a customer pain standpoint, I think you could argue that it's even more acute than the smartphone and wearable customers, because all of these major utilities have spent tens upon tens of billions of dollars putting in wind farms and solar farms. And the reality of the situation is, if you don't have the ability to store that energy when it's being generated by the sun or the wind, it basically dissipates. and these green energy front ends have not been profitable. But EOS now dropped into those environments, gives them the ability to store the energy to charge customers a higher price during peak period usage. So it's a real pain point for utilities. And it's a real pain point that has got to get addressed. And if you take the JD Vance position on the IRA tax credit, there's some stupid stuff in there, in my opinion, like, the government funding all these charging stations and, just stuff that they shouldn't be doing. But in this particular instance, I think it's an issue that, spans politics, and that the economics are, important for the country. and they're good for the country, and that the players involved should be able to cross party lines. How's it going to play out? I don't know. The unit economics are pretty frickin' compelling. With a $50 million line that can do hundreds of millions of dollars in revenue, and they're getting $45 in credit per kilowatt hour, which could be 90 million per year in government subsidies. Well, obviously, if that goes away, it's going to change the dynamic. But if it was cut by 50%, you still got a very, very compelling set of unit economics for the company. And like we talked about, now they're well capitalized. Now the DOE loan is just kind of a kicker. They've got the $351 million Cerebus loan. I don't think we can for a second uh, uh, downplay the value of the deep due diligence that most likely went on for months, in terms of there have been questions about the integrity of EOS's backlog. I guarantee you the Cerebus guys got to wade into that and probably talk to.
Right.
They
Yeah.
waded into the manufacturing line. They waded into the funnel. They waded into, the $2 billion in letters of intent that the company is saying. So I think that now, and again, I took a lot of shit from people on Twitter, and I know I pissed Joe off. I've apologized to Joe, but there were some things that didn't happen, and maybe they were not within his control, like the timing of the loan. There was also a $600 million forecast for Q4 of last year that just vanished with no explanation. But in any event, what he and the team have pulled off is nothing short of Herculean. And the fact that they got through the Cerebus gauntlet speaks volumes.
Yeah,
So
that changed that changed the investment decision. And I just got a Twitter message, about Enevox. Oh, you changed your mind. I don't get this. People can change their mind about an investment. I mean, you can go long, you can go short, you can do those things. And like for EOS, I'm data driven when I make an investment decision, and I put it on Twitter. I said, Cerebus is a game changer. They are a game changer. This is not like, Morgan or Stifel doing a capital raise deal. Okay. These guys get their fees, they get their cheap shares or whatever, they're getting for additional compensation that's been hidden in the deal, and they're going to move along. No, that's not what this is about. I mean, if you think about it, and I've run through this in my head, EOS was able to convince a major player in an environment where we know Silicon Tech VC is dead. Okay, we even had a normal amount of IPOs coming to the market. The credit markets are frozen up largely, unless you're doing repackaging shitty mortgages and creating tokenizations. I mean, other than that, ridiculous stuff. Straight capitalist, investment banking has been pretty dry. And if you had said to me at the beginning of the year, yeah, but these guys are going to get somebody, they're going to get somebody like a Cerebus, you're out of your mind. And
yeah,
right?
never would have believed it. And by the way,
No.
I don't think that the implications of the Cerebus transaction are as well understood.
Well, here, I'll make it simple for everyone. Cerebus is in the business of making money. So they already have mapped out at least 3 exit strategies. Now, it doesn't mean that 2 of them out of the 3 may never see the light of day. These guys, they have the money, first of all, but more importantly, they have connections, right? And having those connections are so vital. I appreciate, and I respect you for apologizing to Joe. I'm glad that Cerebus is there, because up to this point, I don't think Joe's done a great job. I think he's in over his head.
Well,
So that's my opinion, I look at like, hey, now he's got an adult at the table that's going to work with him, right? Work with him, not take over, but work with him. And I don't have to like the CEO. Who cares? But at the end of the day, I looked at it and I said, I don't think he's doing what he said he was going to do. And now he's not talking about things that he talked about before. So no, I don't like this. But go ahead. I'm sorry.
well, no. So it's a valid point. I mean, look, I think, and again, I don't know. I'm just speculating, having sat in the chair successfully for a number of years. But if I had to guess, um, there were a lot of things that Joe couldn't say because he just didn't know, and he had a lot of moving parts. Like, he didn't know when the loan was going to close. He didn't know what his financing options were. He was saddled with $100 million Atlas loan. I mean, I think one of the most impressive things of the Cerebus loan or the Cerebus relationship, financial relationship, is that they basically bought out Atlas at pennies on the dollar of $100 million loan that was usurious in the interest rates that they were charging. So just think about that for a second.
Yeah,
It
no, but
meant that,
you're making my point, Greg. You're making a point.
yeah.
Having those
So
types of people involved, EOS is not going to get that type of deal done on their own. Doors
no. So
open.
I
Doors are going
think
to
so.
open for them.
I'm guessing, but I think somebody, probably Joe, went to Atlas and said, "Look, we've got this deal. We'll buy you out at 20 or 25 cents on the dollar, and if you don't, we're going to take the company into receivership." And that
Right.
that was a huge feature. And you look at the milestone based release of incremental capital. I love that because it means that there's a set of well
Yes.
understood, well defined terms and conditions and milestones that Joe had to agree to, and he has to have confidence that he can meet them. And who's to say that Service isn't going to also be a funding resource to EOS customers? I mean, I think there are just so many aspects and so many dimensions beyond getting through the gauntlet of due diligence. Like, you can argue, do you like Joe? Do you not like Joe? Did he say what he was going to do and then do it? Maybe he didn't have all the levers under his control that he would have liked to have. But the reality is, he got through that due diligence and they cut a check, and that is huge and incomprehensible to most investors out there because they just cannot even comprehend the level of sigmoidoscopy that the company had to endure.
Well, I think that, and I think that's a great point because when I look at Joe, he made the comment about, and it really stuck with me because at the time, pre-Cerebus, these guys are out of money. They needed money. And he made the comment about, well, we're in discussions with, sources for bridge financing. Well, that's cute with words. I would rather him have just said nothing, but don't play cute with words, okay? Because I know what you really meant, which was you've probably talked to a couple of them and they said no, especially in the credit environment. So just, and I get it, because then somebody could say, well, then you're going to be bitching about the fact you didn't update it. You're absolutely right. I mean, I'm going to find something to bitch about because I've always represented the investors, you know? That's why the fact that you agreed to come on here today, Greg, isn't just what a blessing because I am that person, So, but I also know when it's time to go long. And I'm looking at this now going, when I saw today, people like, oh my gosh, the stock is down 12 cents. I'm like, what are you, out of your mind? Shh, be patient. All the things that they
Well,
just put in place, just be patient.
the stocks had a huge run. I mean, of course it should
There's the other,
consolidate.
yeah.
I really am very excited to be in EOS. I mean, look, I have enormous respect for Zero Sum. He's done a ton of work that he's shared. Bryn Carl is constantly turning over rocks. I really liked the setup last year, and I thought, and I was wrong, that all they needed was notification on the loan, and stock rallied up to $5, and then it proceeded to collapse because we didn't know the terms of the closing. And there was a concern about how are they going to raise capital because it's only an 80% loan, and a lot of people got upset and frustrated. We had to go through this crucible to get to where we are, but I took a huge position, sub a dollar within hours of the service
Mhm.
announcement, and I'm really glad that I did. And I think that EOS could very easily be a $15 to $25 stock in 12 months. Because if you think about it, they got a $500 million in backlog. They got a manufacturing line up and running that has gone through site acceptance testing, and I'm assuming is shipping product. They've got $2 billion in letters of intent. They've got a funnel of 1.5 billion. You've got a customer that's got an acute pain point. You've got unique technology. They're well funded. Joe has alluded to the fact that customers were delaying orders until they had confidence with their capital structure. Well, that's off the table. If the orders flow and they start shipping, this stock could be a rocket ship. And you could, instead of wringing your hands about, oh, why'd it go from 210 to a buck 80, and I'm going to get out, and maybe if this is a stock that could be 25 bucks. I mean, you would back up the truck. You
Yeah,
would mortgage.
yeah, absolutely. Anybody, Greg, anybody looking at the risk to reward metric right now, anybody who, in my mind, with what they just did with Cerebras and all the risk that it took off the table, okay? Anybody in mind who sells a stock here, I'm going to scratch my ankle. What are you doing? Oh, well, your liquidity, your retail. I get it. Because the potential now, the probability of them having the opportunity to operation and perform, okay, that risk, the risk that they wouldn't is gone.
It's gone.
And it's gone now, right? It's gone. I'm trying to make the point that Cerebras brings so much more to the table. They're not just loaning money, the operational expertise, the connections they have within their own deck of their own companies. I mean, it's just extraordinary. And then on top of that, with their investment banking connections. And then you throw in connections to the incoming administration. I don't know if it was that day after, the next day, that my members and I, we went in to Leaps and EOSE because that was such a big deal. Now, this is where you want a pre-revenue stage technology or a small revenue stage. All you want to have to bet on is the management and the operations. Can they do what they say? Right? That's where you want to be. And we are there now in EOSE, quite frankly. They're delisted, not going to happen. Run out of money, not for a long time, because Cerebras would do something.
Yeah, well, I mean, if you take the Cerebras financial structure and the DOE loan, they're going to have $750 million in capital, and
they're going to have a team, right, that is helping develop strategic plan, right, or for the entire EOSE story.
Well, I think there's also a dimension of the service deal that's not well understood. Excuse me for interrupting. Is that I talked to, excuse me, a couple pals of mine, and they think of Cerebras as a distressed lender. Well, I've heard that this is actually from a growth fund, and with a different set of optics, looking for alpha.
I look at this now, and both of these, even with especially after talking with you at length, even looking at these now compared to 2 months ago, these are, if you're going to take a chance on an investment for both an Enevox and EOSE tech company, these are fantastic qualities to look for. Doesn't mean they're going to go straight up, and I'm still going to short them when I think that their prices got extended. The value proposition for these has increased so much just in the last 90 days. It's just amazing to me, quite frankly. And
it really is stunning. And by the way, the whole issue of changing an opinion based on incremental data that would cause you to question your bull thesis or your bear thesis, like isn't that what you should be doing if you want to be successful? And to the extent that people that they kind of pivot to ad hominem attacks and insults, and it just has no place in any of this, because at the end of the day, it's kind of what makes a market. And I'm just one voice of many, but I'm representing myself and my views based on decades of experience, and just trying to share my view with people so that they can have the benefit of my thinking if they want it. If they don't want it, don't pay attention to it, but don't attack me personally and disparage my lineage. I mean, it just has no place. And in fact, but for Twitter, that kind of crap wouldn't even be happening.
It doesn't bother me and I don't want this to sound from an arrogant standpoint. It doesn't bother me because they don't get the returns I get. Simple. I mean, period. So it doesn't bother me. Where I go with that is I want to help change that, right? Because there's a flaw in that type of investment logic or in methodology. If your emotions get that involved, where you're going to personally attack somebody, maybe you should take a look at why your emotions are that heightened for something like this, for an investment. And
yeah, I mean, like, I'm not, because I invested, it doesn't make me a card-carrying member of a cult. I'm allowed to change my opinion, provided that it's principled. And I don't think I've met anybody on Twitter that has the credentials to actually critique a CEO's performance. I mean, I understand. I understand the implications of omission. I understand the implications of how things are phrased, when they're phrased. I understand the implications of how things are worded because I've done it and I spent a lot of time thinking about it.
right.
So, if my views help people, great. If they don't, I don't have to listen to them. It's what makes a market.
These two situations right now in EOS and Enevox, I don't, 9,000, 11,000 symbols out there. I don't know them all, but these are fantastic opportunities. I guess that would be my pitch for investors who are sitting there going, why the hell? I mean, now you like the company? Yeah, because things change.
And to be honest, I have yet to be paid the way that I anticipate being paid on either EOS or Enevox, and because I have not been in the pump and dump crowd or the round tripping it. In retrospect, I wish I had, but I really love my positions now, and I've never been more confident than I am today. And my confidence is based on just doing hard work and doing deep thinking and really looking at the progression of the companies and what they've been able to accomplish, over the last 12 months, or even the complete re-rating of EOS in the last couple of weeks. So I was excited to come on the conversational format rather than just a monologue on spaces and then open it up. But yeah, I really appreciate your time, and I really appreciate allowing us to wade into these names and talk about them and expect them from different views.
Well, we'll have a conversation, but maybe I can tie you down to doing another one of these. If I think there's going to be I think it would be incredibly useful to people to be able to hear from somebody who's been a CEO. I mean, again, it's about as close as you can get. I also would encourage you all, if you don't, to follow Greg on Twitter, and it's at JOCEY REYES 209. That's at JOCEY REYES 209. So I would give him a follow. You can follow me on Twitter at Mr. Not Advice, or of course I have the website. But if you have questions, it will add to my ammunition to convince Greg to come back. If you have questions because I come from the trading and the portfolio management side, that I would normally not be able to answer, and you want to get them to Greg, send them over to me. Podcast at mrnotadvice.com. I'll forward them to Greg, and we'll see if we can get him back on here. Because this has been fantastic, Greg. I really appreciate it.
Happy to do it. I really enjoyed it, and happy to jump on any time that you think I can add some value.
Awesome. Well, I wanted to thank again Mr. Greg Reyes for coming on today. It's really such a big deal to be able to talk to a gentleman who's been so successful in corporate America, and especially at the highest level of CEOs. So I hope you all enjoyed that. I'm pretty confident I can encourage him to come back. But thank you for listening. And again, a special thank you to my guest today.
Got no muscle, no hustle, no backbone. I stand alone, not tripping. Just saying, I'm different. Ain't hanging on to the